Hello, this is Scott Herzog, broker owner of M&M Mortgage, and I'm going to talk to you a little bit today about reverse for purchase. Reverse for purchase, otherwise called HECM for purchase, allows a borrower to purchase a loan and then have no monthly mortgage payment after they buy the home. There are certain qualifications for this. In order to get a reverse purchase, you need to be at least 62 years old. Typically, the youngest borrower is going to have to be 62. So if you're 62 and your spouse is 61, you might have to wait a year. So there's the age requirement. And then the big factor is going to be a substantial down payment, typically 40 to 60% down at closing, and then the remainder is going to be financed by a reverse mortgage. There will be no mortgage payments after that. So the amount of that down payment, that big down payment, is going to be based on a few things. Number one, the borrower's age. The younger you are, typically the bigger that down payment is going to be. The older you are, it's going to be a smaller down payment. It's based on life expectancies. The prevailing interest rates at the time, the lower the interest rates in the market, the lower your down payment is going to have to be. And then also the home's value. So those three factors go into, whether you're putting 40% down, 50% down, 60% down, or somewhere in between. Most borrowers finance or fund that down payment by the sale of their previous home, right? They're downsizing from their longtime family home, looking to get into a smaller, maybe single-story living for the rest of their lives. So they've got that big lump sum from selling their house. Otherwise, any assets can be used, your retirement, savings, anything like that you can use to finance that down payment. Then the major benefit of these loans is there is no mortgage payment, right? That payment's going to come out of the equity in the home. So that really frees up your cash flow. A lot of seniors are on fixed incomes. Adding a couple thousand, $3,000 mortgage payment per month is going to be really tough for them. They might not be able to afford that payment, or they might not be able to qualify for that payment. There's no debt to income requirement on these loans. So as long as you have that asset to put the down payment, this can be a great option for folks who can get into a home and then not have to worry about making that monthly mortgage payment. You do have some responsibilities. You have to pay your property taxes and insurance. However, you can fund that as part of the purchase as well. It's just going to require more money down. And then you have to upkeep the home. The lender has your home as collateral. They don't want to see it fall apart. So you've got to do some general upkeep and maintenance to the home. Then you must occupy the home as your primary residence too. You can't occupy another property. You can't turn it into investment property, a second home. It's got to be your primary residence. There's a big stigma on reverse mortgages due to a lot of shady things that happened in the past. But these are now government-backed loans. They're FHA loans and they're non-recourse loans. That means you or your heirs will never owe more on the loan than what the house is worth. So a lot of the stigma with these products came from things that happened 30, 40 years ago. A lot of that's gone now. So you can feel a little bit better about these products at this point. And then aside from being 62 or older, occupying the home as your primary residence, borrowers also must complete a mandatory counseling sessions where you are going to learn all about reverse mortgage. They're going to make sure you understand exactly what you're getting into, if it's the right product for you, how it works, how it's going to work if one of the borrowers on the loan dies, or if both borrowers on the loan dies, what happens after that. They will educate you on all that to make sure you're comfortable. You and the counselor will have to sign off on it. They won't even start your loan until you do that. So that's a big part of the process now to make sure the borrowers understand what they're getting into. These loans are not for everybody. It's not for anybody who's over 62. You should go out and get a reverse mortgage. But they are a really good option for folks who might be on a fixed income and can't afford that mortgage payment, or folks who just want to free up their cash flow for other things to spend their money on. Maybe folks without heirs, or whose heirs aren't counting on, the sale of a home for assets after their folks die. There's a lot to learn about these, so if you are thinking about doing a reverse for purchase, please reach out and we'd love to educate you on the product and answer any questions.